Good morning and welcome to Purpose Driven Finances, where our focus is helping you use your finances to achieve the purpose and plan for your life. And now here's the host of Purpose Driven Finances, Alan Molina with Serwus Capital Management.
Hey, good morning. This is Alan Molina, your host, Purpose Driven Finances, President of Serwus Capital Management. How you doing this glorious day? You know, what is crazy is all the smoke. And I hopefully you're dealing with it and going from it. And I'm sitting here with my co-host, Mary. How you doing?
The smoke is crazy.
Yeah. Now, you know, right before we were taping, you did some news.
Yeah.
And frankly, that's more news that I've heard that's local this week.
Yeah.
So where's the smoke from?
The Canadian wildfires.
Wow.
So hundreds of miles away, near the border.
Yeah.
But it is, we talked with WFXR Chief Meteorologist Patrick McKee, and he said the smoke is wafting its way down here, creating really bad air quality. Mm-hmm. But if there is a bright side, so to speak, it's keeping the temperatures down.
Oh, wow.
We could be well, at 3 digits.
Oh, wow.
If it weren't for the smoke, it's
that
keeping it a little
interesting.
bit lower than it would be. Yep. So I guess that's the bright side.
Is it too early to make
the silver lining?
Is it too early to make some brevity of it?
It's never too early.
If you're at Smith Mountain Lake, there's a song that you could play.
What is it?
Smoke on the water.
Smoke on the very low water.
Yeah.
But we don't want to rub it in.
You know, but hey, smoke on the water is better than no smoke on the water. I guess
it's actually smoke on no water.
Right. Well, no, there's water there. You know, I have friends and clients that are still enjoying the lake.
Good. I'm glad.
You know,
because it's such an enjoyable recreational place for folks, and it's a big tourism area. And
right.
We have heard about people who haven't even been able to put their boats in, and you just don't want that. We want the rain.
Right. And I saw some pictures the other day of someone drove a Jeep down. It would have been below the water line. Mm-hmm. But you know what? We can't always have what we want. You know, and isn't that a song too?
Mick Jagger.
Yeah,
yes,
exactly. Dude, what the heck?
Yeah.
We got Deep Purple.
Yeah.
We got Mick Jagger, you know.
These have to be, because these could be new possible theme songs.
Exactly. Now, folks, those of you who know what Smoke on the Water is about, please do not assume that I enjoy Smoke on the Water, okay? I learned about Smoke on the Water when I was in kindergarten, Mary.
I remember. I know that story.
You know,
too well. Yep.
We had bongs in the house growing up. Now, please don't cancel on me, folks. It's just the way I was raised. You know. And
do your kids know about this, Alan?
Oh yeah,
you have one of them.
Caleb. I've hired him to be my social media guy and blog writer and things such as that. And yes, I'm the kind of guy that hey, you need to know where I came from. Mm-hmm. And sometimes I'm a wild and crazy guy. And so, yes, I showed him 2 of my favorite movies growing up. Mm-hmm.
What were they?
What do you think they were, Mary? I'm curious.
I don't know.
She's like, I don't want to say anything, get myself in trouble or get you in trouble.
I have 2 guesses. What are they?
Cheech and Chong.
I was going to say Cheech and Chong.
Up in Smoke.
Up in Smoke, okay.
And then Still Smoking.
Still Smoking, all right. I was thinking The Big Lebowski.
I've never even...
You haven't seen that?
No.
Okay. But have you seen that one, Caleb? Okay. I definitely was thinking Cheech and Chong.
Yeah,
so, okay.
yeah. And it's just how I was raised.
Okay.
You know.
But no more.
Yeah, I don't smoke any pot anymore. I don't deal any pot anymore. So it's a good thing. You know, I have not applied for any licenses in the state of Virginia either. Right. You know, and neither is my wife.
Right. You could do that
or my kids.
Starting soon.
Soon,
yeah.
You could, you know. But I think my clientele would not approve of that. And I wouldn't like it either. You know, yeah. You know, maybe we should do a whole series on what, you know, because there's a large amount of investments in pot.
Yeah.
And pot is cannabis, but also there is that, it's not flax. It's
the hemp.
Hemp.
Yeah. That'd be very interesting.
And there's a company out of California that they are booming, that they are selling, because they decided to be a big hemp farm. But then Europe opened up and they are charging 3 and 4 times what they did for hemp to sell their marijuana in England, or not England, probably England, but Europe. And but let's just, sometimes
future topic.
I like to have fun.
Yeah.
And that's why we need to have an hour show. One day, somewhere, I will have an hour show, maybe 2 hours. You never know, that because we need a Dave Ramsey for financial planning and portfolio management. I think we do. Mm-hmm. So let's go. So, Mary, what I wanted to do is we're in a series that we're talking about portfolio management. And last week we talked about, I think, the 4 or 5 ways that people basically manage money, portfolio managers. Well, today I'm going to slow walk it. Not like the government does. That's too slow. But I'm going to slow walk it. Really what my philosophy is, what I do, how we do it. And I'm hoping, Mary, that I don't get deep into the weeds like I normally do. I have really tried to simplify the message and communication of Spruce Capital Management. But not only that, I don't like the 30-minute show just being an advertisement about me. I want to provide quality information. That's what my website is also about, quality information that even if someone chooses not to use me as their financial advisor or portfolio manager, then guess what? You have some great information that will help you achieve the purpose and plan for your life. So, Mary, the title of today's show is Before You Buy Anything. I'm going to ask you a question.
Okay.
And you are not prepared for any of my questions.
Okay.
And I like it that way. I'm not even prepared for your questions. When you have money and you want to invest it, what's one of the first things that comes to your mind that you want that money? When you talk to your financial advisor or talk to somebody about something you're going to invest in, what's one of the first things that comes to mind and that you have about that money that you're investing? See, I put you on the spot. I've never heard you speechless.
Well,
and it's unfair, so I apologize.
So, are you talking about just an investment
Anything.
strategy?
I don't care.
Well,
I don't care.
Don't a lot of people?
Because I look at you as common folk. You know what I'm saying?
Is that a good thing, Caleb?
And what I mean by common folk is
like everyday person.
Everyday person. You're not a hedge fund manager. You're not into private equity. That's what I mean. The everyday person in the world that has dreams, has goals, and you're trying to get somewhere. And
then that's your answer. Like, are you going to be able to manage this money wisely to help me accomplish my dreams and goals?
Okay, that's what you would ask a financial advisor.
Yes.
Okay, well, I like that question.
Okay.
A couple of the things that I came up with, and I put all these things into notes, is really the first thing is, are you competent enough? Do you have a process? That's really what you're asking of your financial advisor. But a lot of people, when they look at their money and they go to invest it, whether it's their 401k, 403b, 457, whether it's their account at Edward Jones, Merrill Lynch, Morgan Stanley, Spruce Capital Management, wherever, or if they do it themselves, a lot of times they want the best return.
Yeah.
I mean, how many people go to the bank and say, you know what, I want a CD. I want your savings rate at the lowest possible rate. That would be nobody.
Never, yeah.
Right. Then the second question that people will ask generally, because your question really was a ball. It was
very broad.
Not very broad, but it summed up my first question that normally people ask in the second question.
Okay.
Second question is, do you have a game plan or a process or a plan, or if the market starts going south, do you have a plan for that? Those are and your question really summed up both of those.
Okay.
And I apologize putting you on the spot about that. I hope you don't mind. Hope you'll be back next week. Okay?
I will.
Please. Thank you. But the first question should not be any of those three. The first question is, what is the purpose for your money? And you're like, Alan, this is purpose-driven finances. You're being coy. No, I'm not being coy. Because let's say you're saving. I have been married for a good number of years. 1992, August 8th, 1992. This year, I believe, will be 30. No, not 30. I don't even remember the number of years. 34 years, I think.
Yeah.
34.
Yeah.
That's good.
Yeah.
Thanks, guys. Yeah, I'm like blah 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 blah. My son was saying yes. That's right, Dad. So 34 years. I would like to go to the Amalfi Coast in Italy and go to Pompeii. And my wife, she likes archaeology, so let her do a little bit digging, and then I don't know what I'll do. But I enjoy it too.
Yeah.
But if I were to take money that I saved up to go to a trip to the Amalfi Coast, and I've been saving $100, $500, $1,000, $2,000 a month, whatever the number is, it doesn't matter, because one of my dreams may be Amalfi Coast. Another person might say, you know what, I just want to go down to Dollyland, and is it Dollyland?
Dollywood.
Dollywood, and I like the Smoky Mountains. That dream, that goal, is if you're saving $50 a month, $2,000 a month, whatever the number is, when you go there, you don't want a lot of risk because you don't want it to be cut in half. But in your retirement, if you say, you know what, I'm going to retire in 5 years. Now, I know if I mentioned it here, Mary, did you know that I'm talking to Mary, but I'm also talking to every listener. Did you know that if you make it into your 60s without a significant health issue? I've mentioned this before. I don't know if you remember.
You shared this within the past couple of weeks, and it's an amazing statistic.
Right. You have a 75th percentile to make it into your 90s. So the old adage of, well, I'm going into retirement, I need to be very ultra conservative with my investments, is flawed because you don't want to outlive your money. I mean, my wife said not to use the word suck on the radio, so I'm not going to use the word suck.
It is the first half of succeed.
Exactly.
That's the way I look at it.
So if I'm going to succeed, I need to realize that I may live another 35 to 40, 50 years in retirement. So my money should not outlast. I should not outlast my money. That's a horrible place. We do not want the first part of succeed in there. We do not. We want to succeed. So your investments have got to have a purpose. And so if you as a client think about an investment, whether that's through your local financial advisor, whether it's me, whether it's a house, whether it's a trinket. I collect antique photography stuff. Mary, one day I'm going to be taking pictures with that black thing over you. I'm serious. I almost have everything.
Really?
Yes. It's good. I'm going to do the whole process.
And then your subjects have to stand still.
Well, with the modern day, we can do a little bit quicker.
Okay, good. Okay.
But if we were doing the daguerreotype, we're looking at 30 seconds.
Okay.
But that being said, is you need to have, even with my little lens that I bought from 1862, I need to have a purpose for that. And so that's the number one thing. You got any questions for me, Mary?
Not yet.
Okay, good. Now, here's what changes the math. Now, I could ask my son. He's really good. He's studying to be a teacher. Not a teacher, I'm sorry. That's a professor of church history. It's amazing what he knows more about that stuff than I care to read. If I could ask him this, and he would know because he's sharp at math. But folks who are listening, if your investment goes down 50%, what's the return that you need in order to get to break even? This is where we had the Jeopardy thing, dun, 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 whatever that sound is, the Jeopardy sound. I wish I'd have gotten you guys to do that. So if it's at 100 and you lose 50% of it, it's at 50. How much percentage do you need just to get back to baseline?
200%?
That's close. It's 100%.
100%. So
yes.
50 plus 50. Okay.
And that's hard.
Yeah.
I mean, when's the last time you saw something that got 100% return? You remember I told you not to buy SpaceX, Mary? The last time I checked, it was like at 134 from 210.
Oh, okay.
That's not a good place to be. Not a good place to be. And so what you need to do is realize that there needs to be a process. And so that's going to set us up for the second half of the show.
Oh, you even had it here, right here for me. A 50% loss requires a 100% return, and I still got it wrong, Caleb. You should have thrown me the answer there. Okay, sorry.
So, no, I think it's awesome. So here's what we're doing. Second half of the show, my philosophy, the foundational aspect of how I handle clients' assets is the starting point, the foundation. And I'm going to post this on the website. Caleb's going to do a blog for me. Now, you regulators, of course, it's going to be approved and compliance approved and all that joyous stuff. But this will be on there. And I show it to every client because this is the foundation of where we actually manage money from and the goal. So, folks, stick around. 30 seconds from now, we're going to just have some glorious information. Give me a call, 434-316-0246.
Hi, everyone. Brian Kilmeade here. Coming up on the next edition of the Brian Kilmeade Show, we'll have the biggest newsmakers, news breakers, and take a deep dive into news you care about. Whether it's breaking news, entertainment, politics, or sports, even pop culture, I'll bring you the latest developments with expert analysis from the big names you know and love. Plus, you never know who may stop by. That's all coming up on the next edition of the Brian Kilmeade Show.
Weekday mornings from 9 to noon on WLNI. And now, back to Purpose-Driven Finances. Here's Alan Molina with Serwus Capital Management.
Hey, good morning again. Alan Molina, your host, Purpose-Driven Finances, president of Serwus Capital Management. You know, I was supposed to go on today, Saturday, with my son, my oldest son, to a gun range and just, reduce, the amount of lead in my house. But that being said, I'm kind of hoping that it would rain cats and dogs simply because to get the smoke out of the air. Because I was concerned about people that have respiratory issues, and it's not a good place to be. And when you can't breathe very well, it's not a great place to be. And so I'm hoping for rain, and I have to apologize to my son, but I'm really hoping for a washout on Saturday. So Mary, excuse me. In life, sometimes we wish for great days and all great days. And we look at Instagram, we look at social media, and we say, if we could only have that life, if we could have that job, if we could have that car, that husband, that wife, that girlfriend, that boyfriend, whatever. But we forget that the best days and the worst days live together. And it's the same thing with your portfolio. Mm-hmm. Now, people, I know my valuable listeners. Love you folks. Thank you. And for listening to the podcast. I know it's not very great for me to actually go over, and I'm going to show it to the camera, this chart. It's not very good. But what it does is I've gone over this so many times with clients and prospective clients that I think it'll be a benefit for us to talk about. Now, Mary, what will happen is, have you ever heard the adage, you never want to get out of the market?
Yes.
Okay.
Yes.
Even if you hadn't, you know. Mm-hmm. And let me tell you the reason why advisors say never get out of the market. This chart, this covers 1930 to 2000, our decade we're in, to 2020. Okay. Now, folks, this is done by my old firm, Bank of America. And like I said, I still like, Bank of America and Merrill Lynch. So, I'm not taking any pot shots. This is valuable research that they put out. Now, the price return, what that means is going from point A to point B, the average price return. So from the 30s all the way to the 2000s, the total return is 18,761%. That's nice. We'll take that, So when I say 18,000, I'm just rounding, because who wants to hear me go 18,761%? Nobody. And that's since 1930. So here's what happens. If you're sitting in your portfolio and you get a down month, down quarter, down year, and your portfolio is like an old track runner and they're sucking wind. And you're stressed and you can't sleep, and you go to your financial advisor and you say, listen, I'm down 25, 20%, 15%, 10%, whatever your pain level is that makes you call your financial advisor. And you say, listen, I don't like this. What's going on? I need you to make it conservative. Here's what I used to say to everybody. When I was in the industry before Cyrus Capital Management, and even early on, here's what I would say. You don't want to get out of the market, because if you miss the best days in every decade, your portfolio will significantly underperform. The next column, Mary, if you exclude the best 10 days per decade, that's 10 days out of a decade, that's 3,635 days or something, somewhere in that. But realistically, there's not that many trading days, but that math works. If you exclude the best 10 days per decade, your returns drop to a total, not average annual, a total of 33%. So if your financial advisor told you, Mary, don't ever get out, because if you miss the 10 best days of the decade, your returns are going to be 33%. What are you going to say?
That's eye-opening.
It is eye-opening.
What a difference a day makes, I guess, is another adage.
Right. Or what a difference 10 days
or
make.
10 days make.
Yeah,
right.
exactly. But your adage is exactly right. Mm-hmm. Now, here's the problem I have with that. That's not the full story. What was it? Not Harvey Oswald.
Paul Harvey.
Paul Harvey.
Yes,
yeah,
and
not
now
Harvey.
the rest of the story.
Yeah, now the rest of the story. So now, Mary, I'm going to put you on the spot again. So I apologize.
It's okay. I'll get my math skills ready.
No, it's not math. It's not math.
Okay.
Do you know what a bear market is and a bull market?
Yes, bear market is down, bull market's up.
See? That's not hard. Mm-hmm. So does excluding the best 10 days, do the best 10 days that happen in a bull or a bear?
I don't know.
Okay. That's what I get. One of three questions.
Okay.
Not three questions, but three answers. I ask everybody who sits in front of me, we ask them the exact same question. I get that answer.
Okay.
I don't know. Let's go to part number 4.
Okay.
If you exclude the worst 10 days, you get the 10 best days, but you exclude the worst 10 days per decade, your returns are over 4 million %.
So bullish.
Okay?
Yep.
Okay, so you're going to say that's bullish.
Yes.
Okay, that's great.
Is that right?
We'll find out.
Okay.
So everybody, when I ask them, I say, does excluding the 10 best days, do they occur in a bull or bear market? The worst 10 days, they occur in a bull or bear market. A lot of times people try to hedge and watch me. I try to be very poker face. They both occur in a bear market.
Really?
Mm-hmm.
Okay.
I'll give you an example.
Okay.
You remember the tariffs that Trump did? Mm-hmm. They were just amazing, just astonishing, just a glorious thing. I'm trying to be Trumpian.
Yes.
It's not working, but I'm trying to be.
Right.
But when he came out and said, 90-day pause, the markets jumped like 12% that day. Mm-hmm. The markets were down about 25%. That was dramatic. That 12, I think it was 10, 12% in one day, that was in a bear market. So in this decade, that one day of big jump was a great day, but it still was in a bear market. So here's what everybody will tell me, Mary. Mary, I want you, I don't want you. If I was Mary and you were talking to me or my clients or prospects, they've said, Alan, I want you to exclude the worst 10 days, but give me all the best 10 days. That sounds perfect world.
It does sound like a perfect world.
Not going to happen.
Okay.
The reason being is nobody can do that. But there needs to be a goal, because if they both happen in a bear market, the goal is to reduce the impact of a market drawdown in your portfolio. Because if you can avoid the big drawdowns in a portfolio, then what ends up happening is you can sleep better, but also you don't have to be stressed about if there's a process to protect my portfolio. Because going back to the original two questions, Alan, are you, and I get this all the time, Alan, are you going to manage my account and give me good investments, but also are you going to protect it if the market starts going down? So the goal, and it doesn't happen all the time. Nothing is ever guaranteed except for death. But that being said, what ends up happening is if you exclude the 10 best days per decade and exclude the 10 worst days per decade, and you stay invested, except for, during your returns go up to over 28,000%. It's about 54% of just letting it ride itself out.
Wow.
So the key there, folks, and one of my philosophies, my foundational philosophies is let's try to get and avoid the big drawdowns in your account. In 2007, 8, and 9, this is not bragging. I'm not, it's just what happened. My largest client, we earned 2% per year in 2007, 8, and 9. It's documented fact. My other clients, we were down about 16% on average. It sure beats being down 50 or 60% when the market, I think, was down 56%. Mm-hmm. And the reason being is the process I had back then was I didn't really know what I was doing. I just knew that crap was hitting the fan. Is that allowed?
Yes.
Okay.
Yes.
Crap was hitting the fan, and we needed to adjust. Does it mean that I'm going to accomplish this every time going forward? The answer is no. But our primary and foundational is to try to manage and protect the best we can with a process to protect from the big drawdowns. It's not always going to happen, because I've never experienced a Black Monday. I think in 1987, the stock market dropped 27%, I believe, or somewhere in one day. Mm-hmm. That's not a good day. Mm-hmm. That's a horrible day. So that being said, nothing's guaranteed, so I want to make that clear. But our foundation is trying to have a process that automatically warns us that we need to sell assets. Now, Mary, I've talked so much. You got any questions for me? And if you don't, I can just keep on talking.
Well, we might have some folks who are new to your show. I mean, Can you we just have a minute or so left, but just can you describe a thumbnail sketch of your process?
Well, the process that I do is first I want to find out where people are, what their goals are, and I communicate to people I want to help you achieve that goal. Whether it's retirement, like I have a widow, I shared it last week. She gets $70 out of 2 accounts. And you're like, $70? But she looks forward to that and it helps her. I also have some clients that they get a tremendous amount per month out of their accounts. That being said, I want to help you achieve the purpose and plan for your life, whatever that is. Number 2 is I want to have a financial plan. I use financial planning as a tool to earn your business. I met with a prospective client the other day, high net worth, and they were like, Alan, can you run the numbers for us for if we did a Roth conversion? I said, yes. They said, how much is it going to cost us? Well, nothing. And the reason being is my name of my company is Spruce Capital Management. How am I going to help you achieve the purpose and plan for your life and earn your business if I don't serve you somehow? Now, I get paid portfolio management. Your interests are tied to my interest, or my interests are tied to yours. The better you do, the better I do. It's, it is what it is. If I want a pay cut, the way I get it is that I lose you as a client or your portfolio goes down. Mm-hmm. Pretty simple. And I don't want either one to occur. And so then from an investment process, my goal is to figure out what you want, but then avoid the big drawdowns. Mary, you've heard my ad. If you hear the train coming down the tracks, you get off the tracks. Folks, this is Alan Molina, Purpose-Driven Finances, helping you achieve the purpose and plan for your life. Have a great weekend.
This is not a suggestion to buy, sell, or use a platform. Only will a suggestion occur after a meeting to determine goals, risk tolerance, and time horizons. Investments involve risks and no guarantee of future results.